Hey, good evening. This is Elisa Alvarez, loan officer with Essex Mortgage. So this week I've been handling a lot of questions concerning refinances. So for today's video, I wanted to go over the 3 most commonly asked questions. First, what exactly is a refinance? Second, what does the process entail? And third, and most importantly, does a refinance make sense for you? So what exactly is a refinance? Essentially what you're doing is you're getting a new mortgage payment and replacing your old one. Ideally, that new mortgage payment is going to have a lower interest rate, which will in turn give you a lower monthly payment. Essentially, hopefully giving you a couple $100 in savings every month. What do you do to get a refinance? Well, the process is going to entail you qualifying for a new loan. Now, you may be thinking, well, why do I have to qualify for a new loan if I qualified for my current one and I've been paying every month on time? Well, lender requirements have gotten stricter, so lenders are going to have to consider a few things when considering your refinance, such as do you qualify for the new payment, you're going to consider your income, credit history, and your loan to value ratio, which is how much you owe in comparison to how much your house is currently worth. Before you do all this though, you want to talk to your mortgage professional to work out the numbers. Does a refinance make sense for you? And when you have this conversation, you're going to address 2 questions. First question, if you refinance, will the new rate be at least 1 percentage point lower than your current rate? If it's not, then it probably won't be worth the cost of a refinance. So for example, if it is less, you're going to save yourself possibly a couple $100. Say you have a $300,000 loan amount. It's a 30-year fixed at 6.25% interest rate. Your monthly payment is probably around $1,800. Now if you refinance and your new loan is $300,000, 30-year fixed, but this time 5.25% interest rate, your new monthly payment is going to be $1,600. That's a $200 a month monthly savings. The second question you're going to ask yourself, how long do you intend on staying at this property? You got to make sure that you plan on living there long enough to accumulate enough savings to break even. Now, it's a general rule of thumb that a refinance, the closing costs are going to run you anywhere between 1 to 3% of the loan amount. So in the example of the $300,000 loan amount, closing costs are going to be about $3,000. And at $200 savings a month, it's going to take you 15 months just to break even. So if you've been planning on staying there 5, 10, 20 some odd years, then a refinance really makes sense for you. Now, I went over rather generally and rather quickly, so if you want more information, you can visit my blog at elisaalvarez.wordpress.com. Again, it's elisaalvarez.wordpress.com. Throughout the week, I'm going to be posting a couple of articles in regards to refinancing, going a little bit further into detail. So if you are considering it, remember, your house is probably going to be the most important investment you make for the rest of your life. Make sure you talk to your mortgage professional, run the numbers, and see if it makes sense for you. If you have any questions, you can always contact me. Otherwise, have a great week, and I'll see you next Wednesday.